All right. Hey, everyone. Let me adjust this a little bit. Mark here, Mark P. Markets. Thank you for joining me for another Bitcoin video analysis session. Today is Monday. It's the beginning of the week. We have a lot to talk about. The title of today's stream is How to Measure Profit Potential Using Price Levels. Now, someone had asked me a question about this specifically recently. Here, let me adjust my mic. Hold on. And I thought, wow, that would be a cool topic to lead in with on the stream. But I'm going to get into more detail on this topic during my student meeting on Wednesday. Okay, so a couple of quick announcements and then we'll get into the stream. So in case you don't know how this stream works, let me just explain that first. First, I'm going to go over the economic calendar. Then we're going to get into the Bitcoin situation. I'm going to talk about how to gauge trade potential so that you'll have a better idea as to when you should hold and give a trade more of a chance compared to times when you should not. All right, we can gather that information from the chart. And then I'm going to answer your questions about stocks or altcoins. So if you have a question, please share it in the channel now. All right, I am simulcasting on TradingView. Here, let me move that over here so I could see what's going on. All right. So if you are on TradingView, if you're following me over there, cool. Now would be a good time for you guys to put your questions in the channel. So again, if you'd like to see a stock or an altcoin, please put the symbol in the channel so I can get to it. And make sure that you put USD or USDT after the altcoin symbol, if that's what it is, so I get the symbol right. All right. And also, if you'd like to share what country or what city you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. And no, it's not cool here. This is not one of the cool places to be. Anyway, all right. So, hey, everyone. Stian Sirhan, good to see you. How are you? All right. Stian's been doing a lot of very interesting work. We'll talk about that here in a moment as well. All right. Anyway, so let's get this thing started, shall we? Hold on. Let me pull up this slide right here. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, hopefully you guys read my TradingView article yesterday. I saw someone had a hard time not receiving the notifications. I don't know what the problem is. Maybe TradingView is banning me, or maybe it's the Matrix. I don't know. But I wrote my article, my regular time, and the point of the article was it's getting slow. This is a slow time of the year. And one of the main points of my article was volume is seasonal. You need to realize that, right? A lot of inexperienced traders have no clue. They just think everything is the same every day. But volume is seasonal. And as a trader, especially if you're a smaller time frame trader, like a day trader or a swing trader, you must be cognizant of the peak volume times. You must trade during peak volume if you're expecting your setups to follow through. If you trade in a low volume period, it's going to be the follow through is going to be less likely. You're going to run into more trades that go nowhere. You're going to run into a lot of noise, and you're going to say, I don't understand. Everything lined up and my strategy stinks, right? And you're going to think the strategy is no good. Meanwhile, it's not a supportive environment. So you really need to be aware of your environment and understand how the bigger picture works. I'm going to get into that kind of detail in the student stream as well. So let me just mention my quick announcements real quick before we get into what we have to talk about here. So announcement number one, my student meeting is on Wednesday. That's Wednesday the 26th. I've sent out some invites to some people. I have not sent out all the invites to everyone. These are for my students, people that are members of the community and who are in my training program. Once a month, we meet and I have like a private session with them. I answer specific questions or I go over things they want to go over and that sort of thing that pertains to the training, right? So that they're all on the same page and they're able to use and utilize the information that I give them to help them protect themselves and thrive in these markets. Now, I mentioned this because, again, if you're a student and you're like, I haven't gotten my invite yet, it's coming over the next day or so. You should have that invite. Also, if you are not a student and you're a free member of my community, and if you're not a free member, you should be one. There's a link in the description. But free members, I like to open my student meetings up every once in a while to free members. But listen carefully. This is only available once to you. I got people, they send me, they want to get in again. No, one time. So if you have sent me a request before and you have not showed up, you don't get a second request. You only have one chance, okay? To be fair to the people that actually support me and that pay for this. So if you're a free member and you would like to participate in this meeting, don't send me a request if you don't plan to show up. Number one, if you don't show up, you're not getting a second invite. All right. So I need to be clear about that. So send me a request in the server, right, in the Discord community. Send me a private message. Say, hey, I'd like to be part of the meeting, and I will send you an invite. But I'm telling you, if you don't show up, you're not getting a second invite. All right. So don't ask me a second time. So that's Wednesday, same time basically as right now, but it's going to be a private student meeting. So that's the first thing I want to mention. And again, we're going to talk about this idea of how to gauge trades so that you have a better idea of when you should hold. It's all about expectations, but what do you base these expectations on, right? That's what we're going to talk about. Now, the second announcement that I have to make is, again, for free members, sometime this week, perhaps by Friday or maybe early next week, I will have my free trade scanner, or my trade scanner Lite will be online. What is that? Well, as many of you know, I have this thing called the trade scanner. The trade scanner is a screener that takes my personal criteria and identifies opportunities in the market. And when it identifies an opportunity, it puts trade ideas in channels in my Discord server, right? So there's cryptocurrencies and there's stocks. Those are the two channels, and a lot of ideas come out regularly on the premium channels. Okay, I mean, with the coins, it's got to be at least 2 or 3, maybe 4 ideas, sometimes more a week. It's been very busy. A lot of ideas. They don't all work out, but there's a lot of ideas, especially in an environment where good ideas are hard to come by. So, again, it's based on my personal criteria, and it's a momentum-based trend. It's a trend-based momentum reversal system. That's basically what it is, and it only takes trades on the side of the trend. Now, what is the Trade Scanner Lite? It's the same formula. It's the same thing that powers my regular trade scanner, except it only follows 3 markets. So listen carefully. I don't want to get questioned. Oh, how come I don't see Bitcoin on here? Because it only follows 3 markets. The 3 markets that it follows are Ethereum, Aussie dollar, the Forex pair, and Apple, the stock. That is all it is going to follow and scan. That is all, which means trade ideas in the Trade Scanner Lite channel are going to be sporadic. Maybe you'll get 1 or 2 per week, possibly. And what I encourage you to do is paper trade these trade ideas. It's the same type of text notification, the same type of timestamp and trade instruction, and paper trade the ideas and see if you like how it works. Okay, so it's free. It's your free trial. You can use it as long as you want, and it also gives you a reason to come into my server and get something of real value. Right now, I'm working on improving the experience for free members. I have a long way to go. I understand, but the Trade Scanner Lite channel is something of true value because you're getting trade ideas that are based on something that's been producing a lot of good trade ideas. All right. So again, those 3 markets only, paper trade them. All right. So again, that's coming online sometime this week, perhaps maybe early next week. And that's for free members. Actually, all members will have access to the Trade Scanner Lite channel. If you go into my community now, you'll see those channels at the top of the list. You should see Trade Scanner Lite. It's just an empty channel. All right, just so you know. By the way, if you're interested in any of the things that I do, just check the links in the description for YouTube and over on TradingView. Check my signature. That's where you could find the connections to all this stuff. If you have any questions about anything, you know where to find me. You can also email me at mark@markpmarkets.com. All right, enough announcements. Oh, by the way, real quick, Stian, I have to mention this real quick. So Stian has been extremely helpful in putting together. He's been helping me put together an automatic trade tracker. Okay, so this thing has been tracking the trades in the Trade Scanner channel. Well, how does it do? Does it make any money? Well, it's a spreadsheet. There are 2 spreadsheets, right? There's one with the closed trades, And then there's one with the open trades. This isn't public yet. We're still working on it. We have a few more steps that we have to go through before we can make it public. But when it is public, we will have a way now you can see the results of these trades, because the take profit and the stop orders on this thing are based on the ATR method that I've taught recently. If you want to know about the ATR method, just go through my YouTube channel, go back in April. I think I talked about that stuff in a stream. And my student, if you're a student, you can go back to my student, the meeting archive, recent meetings. I talk about how to use that technique here. I'm not going to talk about it now. All right. But anyway, the trade tracker uses that, and it's a great tool because now you can see the stop and take profit and how this thing performed based on those ATR stop and take profit levels. The advantage to using something like the ATR is it gives you a very quick way to arrive at a stop and take profit without having to spend all kinds of time doing analysis, right? And it's all relevant to the market. It's not just some random number. So that is coming up soon. Thanks, Dean, for helping me put that together, because it's a great tool, not only for us to make adjustments and to see how this robot is performing, but it actually gives you the opportunity to, it takes a lot of work off your hands, because now you can see the stop order and the take profit, and you can just copy them. You don't even have to do the ATR calculation once that spreadsheet is available. To be clear, it's not available yet, but he's working on it. And he's been he's been taking pictures of it and putting it like in the free channel and putting it in the active investor channel. So you can kind of see what the spreadsheet looks like. Okay. He's been putting pictures in there. So guys, check it out. Anyway. All right. Enough of that. Let's get into what we have to talk about today, because we have a lot to talk about. Let's first talk about the economic calendar before I get to this chart. Now, I usually ask you guys, but today I'm going to tell you what's going on. Hey, Milad, how are you? All right, XRP. Sure, we'll take a look. Thank you for asking. Milad is the only guy in New York City that likes to watch my stream. No one else in the entire city likes to watch me, but that's okay. I'm not a big fan of New York City anyway. So let's talk about that economic calendar, shall we? It's a very busy week this week. Now, today is Monday, right? Which is the 24th of July. On Wednesday, the 26th, which is also the same day as my student meeting, we have what? The FOMC meeting, right? The FOMC interest rate decision. Very important. This is important on a lot of fronts, but that usually comes out at what? 2 p.m. Eastern time, and then there's a press conference at 2:30. You must be aware of this because it can change things dramatically if there are any surprises. Most people go into this with some type of expectation. If the Fed has any surprises that come out of nowhere, or if he says something, if Chairman Powell says something unexpected at the press conference, it can change things dramatically, and you're not going to see that coming on a chart, right? If he says something unexpected, it just shows up, right? So technical analysis is not really going to help you here. Why should you be aware of this information? Because if you have trades going on into that meeting, you might want to control risk, perhaps move stops to break even, perhaps take some money off the table, perhaps get out of some trades, don't take new trades if signal shows up, right? That kind of thing. Another thing, going into the meeting, right? Volume, we're in a low volume season right now. And next month, I warn you, is probably going to be worse. So like, how can that be? Volume will be less, right? This is a calendar thing. More people go away in August. Anyway, before I get into that rant, going into meetings like this, you'll see volume basically shrink because no one wants to take any major positions. So please be aware of that and don't force trades. Signals are less likely to follow through. Please be aware of that. Going into the meeting, which means tomorrow afternoon, 3 p.m. is probably one of the worst times, especially if you're a day trader. And then Wednesday, you have the market open, U.S. time, U.S. market open. And after that, stay away. If you're going to day trade, do not bother into 10 o'clock, 12 o'clock, 1 o'clock, because it's going to be very hard because of that volume situation. Now, so that's Wednesday, FOMC meeting. Okay. Thursday, we have what? ECB interest rate meeting. They call it loan facility. I don't know. They always make these fancy names up. It's the ECB interest rate decision. and it's coming out on Thursday. That's usually 3 a.m. or 4 a.m. Eastern time. So be aware of that. That can affect Forex pairs. Not as important as the FOMC, but it's important. Okay, be aware of it. And then that same day on Thursday, we have Bank of Japan. They have their interest rate announcement. Now, so those are the main pieces of news this week that you need to be aware of. That's pretty heavy. I mean, FOMC is pretty heavy. Now, understand that there are other items on the economic calendar. Like there are things like, I think Bank of Japan has their CPI. CPIs are generally important, but not really Bank of Japan. Okay, that's not really a global market mover. Although the yen is a pretty heavy currency, I wouldn't really go nuts over that one. All right, really the key piece of news is FOMC and those interest rate decisions. If you are in any Forex pairs, they can be dramatically affected. So please be aware. Okay, gold, dollar, all those things. All right, S&P, all those things. All right, so now that's the economic calendar. You guys clear on that? All right, let's move along to the next thing. And let me make my chart bigger here. So here, let me make the chart bigger. There we go. So the first thing, before we get into actually what Bitcoin is doing here, I want to mention this volume idea, right? And like I said, as a trader, you must be aware of peak volumes or general volume. I'm not talking about the volume histogram. Don't go put the volume histogram on your chart. Oh, look, the biggest volume candle is right here. No, the volume histogram doesn't mean anything. All right, it's not helpful at all. Trust me. But average volume over general periods of time is important to be aware of. That's why from May to basically October, that's usually a volume period. That volume shrinks to a point, right? The peak being in August, and then it comes back. And by October, early October, now you're back to movable volume again, like decent volume. And then that volume continues to grow and peak until May. All right. So that's the general volume season. And that's important because if you're expecting follow through to begin with, or you're expecting broader moves, you need volume. You need participants in the market. Now, again, volume goes away because people go away. And you say, but who cares? Retail traders don't matter. Well, it's everyone, rich people, poor people, everyone in between. And if there's less participation in the market, right, there's less money to be made. Think of it this way. Let me give you this analogy. I don't know how many people are poker players here, but if you're a poker player, do you want to play at a table with like 3 people and they all know each other really well? No, you don't want to play there. You're not going to make any money, right? It's going to be hard to make money at a tight table where everyone knows each other and there's no other participants at the table. Or would you rather play at a full table where all the seats are occupied, all right, and everyone there is a drunken tourist? That's a high probability table for you to make money. That's how professional card players think, right? It's the same thing here. So you want to be around when all the drunken tourists are playing. And this is usually when they go away. So please keep that in mind. It's an important point. Now, let's talk about this Bitcoin situation real quick. And oh, by the way, if you like my video, please press the like button. Please press the boost button over there on TradingView. Please subscribe to the channel. And also do me this favor. I am streaming on Twitter. All right, in case you don't know, I stream on Twitter. If you follow me on Twitter, do me a favor, retweet my video. I'm not very active on Twitter besides my articles from TradingView and besides these streams. I would like to be more active, but it's just not part of what I can do right now. But you can help me by, again, just retweeting the video if you can. All right, thank you. Thank you in advance. Let's talk about Bitcoin. I know I've been very promotional today, but there's nothing going on. There's nothing going on. Look at this big move. Bitcoin's going to zero. No. So let's talk. In my article yesterday, all right, in fact, I can remove this little thing here because I changed it for the article. We are now inside of this support zone. You see that? I've been waiting for this support zone for quite some time, and I've been writing about it, and I've been writing about it. We are in the support zone, and it takes time. Now, a lot of people, I've been noticing some videos, some titles on YouTube. Early investors, millionaires are going to be made, and nonsense. Please, if you see that nonsense, I hope you know better now. Most of my longtime followers, they know. But if you're new, please, I hope you know better. Or after this video, I hope you learn. If there was any fraud telling you Bitcoin is pumping, Bitcoin is going somewhere now, and you got caught in it, You can only blame yourself for following someone who is unaccountable and someone who does not have the adequate knowledge or experience to share such observations. Anyway, Bitcoin is not pumping. It was going nowhere. We are now in the support zone. So anyone that comes out now and says Bitcoin is going to zero, Bitcoin's bearish, blah, 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 not quite. Bitcoin is now in a support zone. This is a failed low support zone within a broader bullish trend. Now, that takes me to the topic of the subject of today's video, the title, which is how do you measure profit potential using price levels? So this Bitcoin is in a perfect example for me to show this, to demonstrate this. All right. Now, when you're looking at potential, profit potential, it comes from the bigger picture. So what do I mean by that? The bigger picture. Well, you need to be aware of two things. And I tell my students this all the time. We're going to go over this during the meeting. Steps 1 and steps 2 of the training, right? Step 1 is trend. Step 2 is levels. You must know that those are probably the most important steps next to the confirmation step. But trend here, if you know how to identify it properly, trend is still bullish. No, it's not bearish. It's bullish. This structure right here is the structure that is in play. We have not taken out any major supports relevant to that structure, which means the general trend is still bullish on the shorter term timeframes, right? That means when you have a situation like this, when you have like what looks to be a dramatic pullback, that means there's opportunity. And if you're getting into a high potential support area, right, meaning you're getting into a level, a support level that's relevant on the larger time frame, and a signal develops there, that signal carries more weight, which means that signal has more potential. Why? It's relevant to the larger time frame. Understand, levels on larger time frames, the reason why they are important is because more volume has transacted there historically. So if we have a lot of volume that transacted between basically 29 even or 29.5 and 28 even, if we have a lot of volume that transacted here historically, which we do, look at all this price action back here. Where do you think I get these levels from? Do you think I just make them up randomly like a lot of frauds do? No, they come from historical price action. So there's a lot of potential volume, right, that was generated here, shorts and longs. When this thing pulls into such a level, there's going to more likely be more participation, right? So when you have a broader level, that broader support within a broader bullish trend, you have two very important things lining up. Now, because it's a larger time frame or a larger magnitude level, this level is not on a 15-minute chart. This level is not on a 5-minute chart. This level is on a daily chart. You can argue that this level could be on a 4-hour chart. Okay, sure. But generally, we're looking at a daily chart. So if Bitcoin tests a level on the daily chart and it rejects that level, the potential of that rejection is going to be greater. So I'm looking at my next resistance. If we do get a buy signal here, where are we going? Where are we likely to go? Well, look at the resistance. The resistance is basically this 31K area, okay, up in this area. So 30K, 31K, which means if you're taking a day trade, maybe you get a day trade signal at 28,850, okay? And you say, well, I don't know, should I hold this? I don't know what to do with it. First of all, you should be using your ATR on the day trade time frame to give you some initial reference point. Second, because you're taking a long within a broader bullish trend within a level that makes sense for larger time frame longs or longs with more potential, you don't have to go 1.5 to 1 reward risk. You could say, well, you know what? We're at a good level, okay? We're at a high potential level. There's more of a chance that if this thing really goes and this thing squeezes, we can see 30K. So instead of a 1.5 to 1 reward risk, maybe I'll put a 2.5 to 1 reward risk. Maybe 3 to 1. I'll be a little more aggressive. Realize the further away you put your take profit, the lower probability you have of it being reached. Keep in mind that when you're dealing with day trades and swing trades in particular, it is extremely important to use both a stop and a take profit. Don't just, I talked to someone, I'm not using take profit level. Why not? Well, I want to give it a chance. Well, the thing is, when you're working on small time frames, the markets are much more random. And there are many times, and I'm sure you've all seen this, where the market will bounce or it'll spike, right? Like we've had in this area here, which I'm going to point out here in a moment. You have these situations here. Let me open this up a bit, okay? Where the market, hold on, my mouse is giving me a hard time. There we go. You have these situations, right? Like this. Watch, like this, where you have, see all these spikes? We can, if I open this up on a 4-hour chart, you'll see what I'm talking about. Okay, hold on. That should fix it. Okay, here, I'm gonna go to a 4-hour chart, right? Let me just zoom out here. Now look at this, right? This is that same area. Look at all these spikes. If you don't use take profit orders based on your ATR, which gives you a proportional take profit, what happens is you stay in the trade, and instead of taking money out of the trade like you should have, you get stuck in the trade and you watch it go back to here. Break even, possibly even stop out. Oh, I never make any money. But the market offered you money and you never took it. Why? Because you're full of greed and I think it's going to go higher. No. Okay, not in this situation. Again, you have to understand your environment, understand where you are, and understand the nature of the type of trade you take. If it's a day trade, you shouldn't have high expectations to begin with. But again, the question here is, how do you measure profit potential using price levels? That is how. You look at the larger time frame price level, okay, in this case, the daily time frame, and you say, are we getting a signal there? Whether it's a day trade or a swing trade signal, are we getting a signal there? And if so, and that signal is on the side of the trend, the broader trend, then it's reasonable to say, okay, I'm going to go for greater than 1.5 to 1, even though the ATR tells me 1.5 to 1. I'm going to go for more because I'm going to give the market a chance to realize its bigger picture potential, because that's what probability favors. Do you follow all of that? That's really the key. It's a mindset thing, and you have to understand when to do that. Like, and because we're at such a level, that scenario may present itself over the next few days. Like the trade scanner may give us a Bitcoin trade, possibly. I have to look at the trade scanner charts, but the trend on there may have changed. But I have to see. But the point is, the trade scanner called quite a few longs in Bitcoin in this area right here. And I warned people. I said, these are less than ideal locations for longs. If you're going to go long, low expectations. You want to give it 1.5 to 1 reward risk? Okay. But I was not encouraging people, and all my members here can tell you, I was not encouraging people, put 3 to 1 because we're cool. I wasn't telling people that, right? And a lot of people were able to get away with selling their positions in these areas because I gave them the context. And I want them to learn this context for their own, on their own, so that they could make those judgments on their own. So the trade scanner told them to get in. They knew how to place the orders. By the way, people do not appreciate order placement. Everyone thinks, market order, whatever, right? Order placement is the most important thing. It's more important than analysis, because the order placement is really going to have an effect on your outcome. And what I mean by that is, you may have situations where your trade was green and it turns red and it stops out. We see this with the trade scanner all the time, but there may be opportunities, if you understand order placement and trade management, there may be opportunities to break even in those situations and not stop out. That changes your overall performance dramatically, right? If you have 10 trades, 8 of them get stopped out for break even, but then trade number 9 or whatever, trade number 10 is green, you're green. You don't have to make up all these trades that you got stopped out on. You're starting out because, in the green, because you haven't lost money on those stop outs. Now, of course, not all trades work out that way. Some go straight into the red. That happens. But there are many situations that I see where the trade goes straight into the green, never reaches its take profit, turns, and stops out. That happens a lot, especially on momentum-based trades, on particularly day trades. Now, so let's take the step a little further here, because Stian asked a question, and that question goes straight into the point that I want to make with this Bitcoin situation. And he asks here, here's his question. I'm going to just put it up. If we see an inside bar on the 4-hour for Bitcoin, does this mean we can go long or we can go back up to 30,000? So the 4-hour chart, this is a daily chart, but it's going to be the same idea. The 4-hour chart is obviously a smaller time frame. So if we see, to answer that question, if we see the inside bar on the 4-hour chart, yes, we are in an ideal location. This is now an ideal location. The trade scanner may not call this because the momentum may have changed. I have to look. The way it judges momentum based on this movement right here may have changed, but it doesn't mean that you have to avoid this if the trade scanner refuses to see it. There will be situations where markets transition and the trade scanner gets blind to certain things, right? That's where you have to step in with your own context. I would call a long. So the 4-hour or the daily. Let's talk about the daily first, and then I'm going to go to the 4-hour. So over the next couple of days, now keep in mind, we have the FOMC on Wednesday. So, and that can change things. But if you see an inside bar develop like this in this area over the next few days, or if you see a bullish pin bar develop in an area like this, okay, it looks kind of like this, bullish pin bar. Here, let me draw the bullish pin bar. All right, something like this. You see this here, like that. Over the next few days, those are the type of long signals that I am looking for, that I would step in and put like a signal in the signal channel, swing trade long, right? On the daily time frame. Notice, I'm not looking at a 5-minute chart here. This is a daily chart. This is where swing trades, this is appropriate for swing trades. You can use a 12-hour, you can use a 4-hour, but I call those trades from daily when I call them. So this is what you're looking for over the next couple of days. I'm giving it to you now. It doesn't mean that the market will deliver this. But if it appears we are in the location where these would become high probability setups with high potential. So is 30K reasonable? Yes. Where is 30K? 30K is right here, right? Basically, like the bottom of this rectangle that I have in the chart. That's a very reasonable resistance. It may take a few days to get there, possibly, but that is within reason. So that's where I would be open to putting that type of take profit out there. Of course, I may have to adjust that along the way, but initial order, yeah, I would put it there, and that's how I would gauge that. Let me know if you guys have questions about that whole process that I just described when it comes to gauging the potential. Now, let's go to the 4-hour chart, okay? So he's asking, on the 4-hour, look at the 4-hour now. There's a pin bar in there right now, which would be an aggressive long. I would only look at that really at this point as a day trade, although it could turn into a swing trade. The thing is, you have the location, okay? You have to determine if you want to go for the day trade or the swing trade. The trade scanner, by the way, only looks for swing trades, but you can adjust that to day trades using your ATR. Anyway, look at this candle right here. You have the bullish pin bar right here. It's closed, okay? See that? So if the high of that candle is taken out, which can happen in the next 4 to 8 hours, the high of that candle is 29,244. That could be a swing trade long right there, or I would say maybe a day trade would be more appropriate. Now, why would I say that now? Because we are in an ideal location. Well, the reason why I would consider day trades right now is because we have the FOMC on Wednesday. Again, this is all about context. If there was no FOMC on Wednesday, then maybe I'd be a little more confident with this. But since there's a high chance of random price action because of that, or lower volume, it may not follow through. So you might want to be more conservative with your expectations, right? This is the 4-hour. So if you get the inside bar or the pin bar, right? You have the pin bar now, but if you get another like inside bar, yeah, you have your potential entry signals. And again, you can calculate your stop and the take profit with the ATR. I would just say again, something like that, okay? Just to be a little more conservative. Does that make sense? And I'm calling for the conservatism because of the FOMC coming out on Wednesday. All right. So that's pretty much where we are with Bitcoin. I'm going to start looking for questions in the channel now. You guys got that so far? Let me take this off here. Okay. So that's pretty much where I'm at. I've covered how to use levels to gauge the potential. And it's going to depend on whether it's a swing trade or a day trade, but the broader level is going to offer more potential. If, for example, you're using a 5-minute chart and you're trying to gauge levels on there, you can do that, but your potential is going to be very small. So in that situation, let's say you're using a 5-minute or 15-minute, is 30K reasonable? No, because you're using a 5-minute chart. It's going to be, the random nature is going to be much greater. Always remember, markets are mostly random, and you have to accept that. If you don't get that, quit now, because you're never going to make money. All right. You have to understand that markets are random and that anything is possible. And you want to side with probabilities, not hunches, not feelings, not, my favorite fraud told me this. You want to side with probabilities. So your goal really should be to learn how to assess loose probabilities based on information that we can gather from these charts. All right. Notice I don't have all kinds of nonsense drawn on my chart. I'm using lines to point out levels, and I have awareness of trend. Those are pretty much the main analytical features. I teach my members about fibs. I teach my members about wave counts, but those are secondary compared to what we're looking at here. Okay. Anyway. All right. So let me start scanning through some questions here. Again, if you like my stream, if you appreciate what I'm doing, please press the like button. If you haven't, please press the subscribe button. Please join my Discord community. It's free. And I have, like I said, my trade scanner light coming online very soon. So you can see some trade ideas, maybe a couple of weeks, possibly from there that you can paper trade with. And also another note that I want to mention, just in this environment in general, when we get slow, and next month probably slower, don't waste your time in front of charts. Do yourself a favor. This is a good time to read a book. Okay, there are many classic books on the markets. Paper trade your strategy, test the robustness of it, learn about things that you'd otherwise not utilize right away, learn about how time value works with options. Like, oh man, I'm falling asleep. Learn about these things. Learn about how interest rates affect the business cycle. Learn about these things because they're very important, especially when it comes to bigger picture expectations. You need to know these things. Like I wrote in my article, if you want to press buttons all day and think you're going to make money without putting any work in, you're only fooling yourself. Okay. The people that are truly passionate about this business, they're not passionate for the money. Sure, we're all here for the money, but you have to be passionate about the business. Because if it's all the money that you want, there are much better ways to make money than this. Trust me when I tell you. So you have to be passionate about financial markets and how they work and the herd mentality and the psychological nature behind this and how the microstructure works and all these things. How do market makers operate? How do hedge funds operate? Like, you should be interested in these things. If I just want to make money and drive my Lamborghini, have fun, then go to TikTok, because there's plenty of people on there that will sell you that dream for thousands of dollars. All right. I'm telling you, you will not be able to compete. You know what this game is like? Before I move on, this game really is like the NFL. People, NFL, professional football in this country, in the US, people don't realize, right? The people that they see on TV, when you watch these NFL stars, these quarterbacks, and they've been in the game since they were probably 3 years old. Do you realize, like, they've been committed to that game by the time they're 20 years old or 20, they're getting drafted into the NFL. Do you realize by that point they have at least 15 years of experience in that game, right? And that's probably one of the hardest games in the world to compete in. And to become a professional athlete, we don't see all the failures. We don't see the commitment and the sacrifices that they make to get to that level. This guy's a quarterback. We don't know what he went through to become a starting quarterback at the professional level, the kind of competition. My point is, if you want to get somewhere in this game, you have to have that kind of passion and commitment. And the money can't be the only factor, because if it is, you're in trouble. All right. I went at least 15 years without making money, just so you know. Frauds won't tell you that. Oh, I was making money 2 years into this. I made money in the very beginning when I started, but we can't compare that, because that environment is nothing like what we had today. And the advantages that I had back then don't exist today. Okay. And when those advantages were gone, I had to learn how to trade. And I spent over a decade not making money, but I stayed with it because really, I wasn't good at anything else. And I was passionate about the markets, even though I wasn't making money. Okay. So just a little lesson there for you. I bring that up because when things are slow like this, the environment is slow and it's like, man, this sucks. Use this time wisely. Get a book, paper trade, learn something. There's plenty of information on the internet. Steen shared this video of this guy. He's a PhD. I forget his name right now. He's a PhD in I think finance at NYU, and he had this video that he made. Hadn't watched the whole thing, but like again, that's something that's interesting, right? And it was about this AI, like what is nonsense, what is all this AI hype, like, and I guess he went into some of the details on that in this video. Yeah, it's tough to watch, especially if like you're looking for like stimulus and exciting things. But that's what I'm talking about. Like that's the kind of stuff you watch, not TikTok boy in the basement of his parents' house telling you that you're going to be the next millionaire. I hope you don't watch those videos. Anyway, by the way, you make those people rich just by watching. You don't even have to pay for anything. All right, let's move on. I've been ranting a lot today. Let's move on now to questions, shall we? So I answered that question from Steen. Let me jump over to TradingView. These guys have been putting stuff here, and I've been ignoring you. Sorry, guys. I don't see a lot of action over here in TradingView. I got Malad with half of the comments. New Yorkers are missing the great content you produce. I appreciate that. They're too busy enjoying the summer in the city. I don't know how you enjoy the summer in the city. It's hot. It's miserable. Unless you're like at the best like nightclubs and stuff, or you get like the best, apartments. I don't know. I don't even enjoy it in New Jersey. All right. Anyway, I'm joking. Okay, cool. No problem, you guys. Oh, from Brussels. Welcome. What's the trade scanner? I always get a question like that. So I explained that like 10 times. So I'm sure you heard it. So I'm not going to answer that again. But basically, it's a screener. Okay. It's my screener with my personal criteria, and it's available in channels in my Discord community. It produces text notifications. I've gone over them many times in my streams about what they look like. And, even we talked about a trade idea a week ago. What trade idea was that? Can you guys remind me? Was it Binance Coin? Steen, can you remind me? Maybe someone remembers. I went over a trade idea from the trade scanner that it called that day, and I don't remember which one it was. But maybe we can take a look at that if someone can give me the trade idea. All right. So, yeah, that's what that is. So, Milad, let's start with you. Can you look at XRP? Yeah, let's jump over there. XRP. All right. XRP, USDT. Now, I know there's, I know about the hype. I warned you guys, right? I warned you guys. How many, just how many of you got caught in this because of the hype on YouTube? All right. You don't have to answer that question, but just answer it to yourself. If you bought here, and I know Milad had not bought there, but if you bought there because some clown on YouTube said that XRP is surging and it's going to be $10 by tomorrow, you can only blame yourself. You follow someone who's not accountable, someone who probably doesn't use their real name, and someone who's only looking to capitalize, literally turn your attention into dollars for them, not you. I hope you learn your lesson. Okay, not you, Milad. All right, anyway, so Milad's question. I closed my XRP with 30% profit on Friday. Not too bad at all. Nice job. You closed it on Friday. So that was like, I guess back here somewhere. Friday. When was Friday? Today's the 24th, right? So it's like around the 20th. Oh, that Thursday is 20th. Friday's the 21st. Okay, so you close it like on this pullback situation. All right, not bad. If you took advantage of this movement here, these are tough moves to take advantage of. Okay, on XRP or moves like that, because when they go vertical like that, you're like playing musical chairs. You don't know when that thing is going to turn. Okay, and usually it turns when it looks its best. Look at the action since then. So they had their court case, right? They proved to the SEC that they're not a security, whatever the big nonsense was. And look, since then, this thing went from the peak was 93 cents. Oh, this thing's going to be at $5 in 2 days. And we are now at 70 cents. Welcome back to reality, right? Anyway, all right. So let me get a little less emotional here. And let's talk about this from a technical perspective. You have a support level that's in the 70-cent area. It's right around here. Now, Bitcoin is pulling back too, so that's going to help this thing pull back. I don't care what coin you look at, they all generally will be affected by Bitcoin. So Bitcoin is in pullback mode. If Bitcoin finds support, perhaps you will see a similar pattern here, like I just pointed out in Bitcoin. That may offer a swing trade idea, possibly swing trade potential, which again, you will be looking for take profit levels around that 85 to 90 cent area. Those are the levels right now. Will it go higher? Who knows? If Bitcoin doesn't go higher, this thing probably would just become range bound. And since the whole world probably bought up in here, right, you're probably going to see more pain as they all get margined out of their positions because they have no idea what they're doing. That's what greed will do to you. Now, so you have the support level. If this support level is cleared, Milad, meaning price closes below that, then you're looking at the next support. And the next support on this thing is here, right? Which is what? What price is that? That's 58 cents. You could round that to 60 cents on XRP. Those are your levels. Generally, XRP has a general bullish type of, at least midterm trend is generally bullish with the higher lows sort of and the higher high. Okay, so it's reasonable to anticipate the next support to hold and the high eventually get taken out, but you have to be careful of something. These things, this move was the result of a court case, right? And nothing more. So basically it was hype that really got that thing going. If there's no money generally coming into this space, which there really isn't, we're not in that type of environment, then the chance of making the higher high is lower. Understand that, which means, where do you get your cue from that? The cue comes from the bond market. And we can take a look at the bond market real quick, which hasn't been really doing anything noteworthy, right? So I talk about this every once in a while, ZN1. This is the 10-year note. If you don't follow this, you are blind to everything that moves the world. This is the 10-year note futures, okay, which is inverse to the bond yields. Look at this thing. In order for the altcoins to do anything spectacular, to get everyone all excited, to make billionaires, bonds need to be up here. At least the bond prices need to be taking out resistance levels. We are nowhere near these levels, okay? Which means rates are not looking good. They're ugly. Rates are not exactly looking good. But they're not doing anything noteworthy. Like I said, look, as long as we stay inside of this range, we are nicely inside of the range. My opinion is that we're not putting any extra pressure on these banks that are exposed to this, right? All the banks, the long bonds, if the bonds break supports, that's where you see banks fail. Bonds are not breaking supports, right? Bonds are inside this range. So the market is kind of accustomed. Also, we have this situation with this Fed Now thing. And that, I don't know, since that's changing sort of the plumbing of how things work and how banks, it's changing the plumbing of the fractional reserve system. I don't know how that will affect this bond relationship. I'm not even sure how if it would adversely affect it, make it more relevant or less relevant. I don't know, but that's happening now. Okay, that Fed Now stuff. I know there's a lot of controversy. A lot of people, it's bad. And yeah, in terms of control and personal freedoms, yeah, there are some problems there. And how that's going to affect, like how bond rates affect things, if the Fed controls everything and there's no more, they don't have to depend on banks, like banks aren't stuck in between, then I don't know, the Fed can just print money. Right? And the Fed doesn't have to worry about a bank run. So I don't know, coins making you rich. Not yet. That's all I can tell you. All right. Not yet. All right. Let's move on to the next question here. I'm going to jump back over here to YouTube. And again, I appreciate all your questions, everyone. Let's see what we got here. Okay, so Stian, can you have a look at SOL for potential day trade at current position? Sure, let's take a look. SOL USD. Where's Alex? Is Alex here? I know Alex asked me about the dollar like 10,000 times on my previous stream, and I never got to it. Now, there he is. Okay, Alex, I had XRP, thought about selling. I'm planning to keep it until the bull market begins. Okay, all right. Well, you know what you're doing. You're a student. If you want me to see, if you want me to see the dollar, if you want me to check the dollar out, let me know. Oh, Steen, cool. Steen put the trade idea. Matic, was it Matic? Okay, cool. We'll take a look at that. We're going to take a look at that. Yeah, Alex. No, I haven't done the dollar yet. Cool. I'm glad you're here. All right, we're going to go over that, Steen, Alex. All right, so I'm going to take a look at Solana first. Let's do this real quick. So Steen's asking about a day trade. Well, so before we get to the day trade idea, let's take a look at the swing trade situation. Let's just take a look at the bigger picture for our trend and our levels, right? Nice move on this thing generally, and it's pulling back, right? So our short-term trend is certainly on the bullish side. We can argue that, and I believe the trade scanner will probably agree with that. I know it's called some longs on this thing. I don't trade this thing myself. So let's take a look at the 4-hour chart. So basically, we've determined pretty quickly that this thing is generally long, right? It's generally a bullish play. We should not even be thinking short, not even a thought, right? Okay. Second, he wants to know about a day trade. So let's take a look at this thing here in terms of levels and what's going on. You have a support level, an old resistance, new support at 2250. This thing is at 2331 right now. Okay, so keep in mind, in these situations, right, when you have this type of situation going on, you have a level of interest right here. This is certainly a level of interest. So if you get the inside bar, or you get some kind of bullish reversal, man, this mouse is giving me a hard time. Hold on a second. Let me just press this over here. There we go. All right. So if you get the reversal in here, I mean, this little candle right now, you have like that little inside bar, that doesn't really count. I mean, you need to see something a little more significant than that. Hold on a second. There. Let me open this up a bit. Okay. So you have the inside bar. That's a little tight, right? So you want to give it a little more room, maybe 2368, maybe 2370 for the day trade. And then you could use your ATR. I'm curious, what is the ATR on this thing right now? Let me open it up and find out. 62 cents. You can round that to $1, or if you want to use 62 cents, that's fine. But if it's $1, right, we know what to do on this time frame. You multiply it by 2. You're going to use basically a $2 stop, or at least what, a $1.20 stop at least, or $1.22, whatever the number would be. And then you're going to multiply it by 3. So you're going to use a 3 point or $180 take profit for something like that on this time frame. Okay, that's within reason. If you're going to go to a smaller time frame, you should use a higher multiple of the ATR. But yeah, you're at a decent level. I would just be careful. Wait, be very patient for that signal, and also keep in mind the environment. Right, we're going into an FOMC meeting, so follow through may be very lacking, especially if Bitcoin can't get its act together. This thing may be problematic. I mean, look at all these attempts. You had a situation right here. That was an attempt, and it failed. Okay, you had a situation over here. This was like an attempt, and it failed. So, and you're not exactly on that support area yet, right? You're not. You still have a little room to play with here. So I wouldn't be overly aggressive. Does that make sense? One thing you can also do is adjust your size and maybe go a little smaller because you're in that less than ideal situation. Does that make sense? All right, cool. Now, so that's SOL. Now, let me jump over. I'm going to jump over to Han. I see your question. Thank you for asking. Let me just jump over to the dollar index because Alex asked me like 1,000 times in my previous stream, and I just completely missed it. And Alex I have to say, Alex is probably one of the most committed students. Hold on a second. DXY. He's been so on top of it. He completed all the assignments. I mean, this guy is serious. That's what I'm talking about, like passionate. He's also from Romania. Anyway, so this is the 4-hour dollar. Let's go to the bigger picture here. Look at this. So the dollar has this little rally situation going on. Now, often the dollar is usually linked to the bonds, but obviously not now, right? The dollar looks like it's doing its own thing. So let's zoom out even further and let's take a look at a weekly chart, right? What can this tell us about the dollar? Well, generally, right, generally, we are in a dollar supportive area, generally. All right, it's not precise, it's not exact. We got the failed low, as you can see, and we have the weekly inside bar, which is closed. And here's today's candle on the dollar. So, Alex, if this thing takes out, if the dollar takes out 101.18 is basically the high, the previous week's high, which is right, it's right there. Actually, has it taken it out? 101.42 is today's high, or this week's high so far. So we can argue that there's a long signal in play on the weekly, on the dollar. Long signal. How far that goes, who knows? We have FOMC on Wednesday. That can turn this thing around real quick, and we can be testing lows if there are any surprises. But right now, dollar is strong. There is a buy signal, which means everything against dollar is going to feel pain. The take profit area, or the target on the dollar, would be this area here. Okay, I'm looking at a weekly chart right now, 103.5. So if there's dollar bullish news on Wednesday or maybe Thursday, whatever, maybe with that euro stuff, maybe those are catalysts to help push this thing into that area. But all I can tell you is right now, there's a long signal in the dollar, all right, which is going to be bearish for any Forex pairs and all those other things, all right? You don't want to chase the dollar, of course. If you're not long this thing, you just step aside, or you have to check your other currencies if you're interested in doing something. Keep in mind, this thing can easily pull back a tad, right? Again, especially going to FOMC. Watch this level right here, which is 101.74. You could probably round, no, I'm sorry, 178. Watch that. So the 101 level, watch that level going into Wednesday. It may offer some buying opportunities possibly if that level is tested. But right now, this movement here has confirmed a buy signal in the dollar. And even though there may be some noise, I would look for continuation patterns here. Maybe that's what you could look for on the currency pairs if you're looking at Forex pairs. All right, so that's the dollar index. Very important. You should always keep an eye on that thing. All right, let's move along. So, hey, Dom, how are you? Bitcoin is zero. Yeah. All right. Han, Doji looks more bullish, looks like bottomed, okay? Could be the catch-up move, or is it squeezing higher? So again, look, Doji is just, we know it's a meme coin, okay? It's gonna just move on hype and nonsense. So let's take a look at this technically. Going back to the daily chart, what do we have here? Well, support levels are going to basically be here. Resistance levels, you have one right here. This thing is going nowhere. So I don't know what the excitement is about. This thing is just look at the overlap. Okay, so you may say, whoa, it's doing this right here. Oh, okay, so that's good for day trade type of action, but swing trade, this is not impressive at all. This thing is not taking out any major levels, right? Look at all these levels. Yeah, look at all this area right here. This entire area is a congestion area. And that's what it's starting to push into right now. That's the daily chart. So that would be an area, like if I was long this thing, I would be looking to get out on sell signals. If I was extremely aggressive and I was open to shorting, I would be looking for shorts. This thing is just not impressive. And you're certainly not at support levels. So if you're interested in any longs, swing trades or day trades, at least wait for a support. Your first support is what, 6931, that area right there. This is your first support area, okay, right around here. So if you're going to do anything with it, that's where you should consider doing anything with it, not here. This is a place to sell. There's nothing impressive about this at all right? Don't get caught up with this nonsense here, right? People do this all the time. Oh, look at this, right? And you get isolated on that. You have to look at that movement relative to this. You have to look at the bigger picture and compare, all right? So keep that in mind. Okay. So just a quick example. If you had a move like this instead, and it was breaking multi-year highs, that would be a little more impressive. Not this. This is nothing. This is a range-bound market, all right? And in a range-bound market, you want to be more open to selling at resistance levels and buying at support levels, all right? I'm not going to check against BTC, but that's against the dollar. Okay. Okay, cool. Thanks, Dom. Yeah, we got the FOMC. All right. Covered that. Okay, no problem, Alex. Alex, you've been what's going on, man? You've been slacking, Alex. All right. WorldCoin, WLD. Okay, I'm not familiar with WorldCoin. Oh, thank you, Stian. Aswanth Damodaran. I don't know pronounce. That's the guy I was mentioning from before about on YouTube. He's a PhD at NYU, and I have to say he's a fundamental expert. And while some of his stuff may be hard to consume, you want to know fundamentals and you want to skip all the nonsense and promotional BS and affiliate links. Well, watch him, okay? Because he's there to actually teach. Anyway, okay, Alex had XRP. All right, so let's do this real quick. Stian says here, bullish, momentum, reversal, Matic, okay? This was a trade scanner trade that we talked about that day. Let's just see where it went, okay? Let's just put it on the levels here on the chart, and let's just kind of see the outcome of that if we had taken that trade long that day. So you guys see that. So for people who are asking me, what is the trade scanner? That right there, what you're looking at, is a trade from the trade scanner from a week ago. You can see the date on there, 7/17, and the timestamp, okay, and the price. That is the raw trade data that comes out in the text channel in my Discord server, if you're a member and have access to it. Here's what it said. 7798 long on the 17th. Let's just put that on the chart. So where is that? Let's go back to the 17th. That's over here. Where is that? 17th is right here. Okay, so let's just put that on the chart. This is a daily chart. We need to go to a 4-hour chart. Whenever you use the trade scanner, the first chart you should look at is a 4-hour chart. All right, that's what it was actually meant for. Now, so let's go back to the 17th. That's right here, 17th. And let's see, that price again is 7798. Okay, so 7798 is right up here. Okay, 7798. Let me draw a line there. That's right here. It called a long right there. This looks like a stop out to me. Let's see. So 7798. Let's see what the ATR was at the time of that call. It was 21 cents, right? So we'll round that to 22 cents. So the stop on this, all right, we know the ATR. Oh, wrong button. Hold on. Okay. We can turn this off now. So 22 cents, right? So if we multiply 22 cents times 2, we get 44 cents, right? We can even round that to 50 cents just for the easy math. So we were looking at what, a 50-cent stop on this thing? Is that right? 50 cent, does that make sense? Let's see. At 72 cents, 22 cents. Yeah, so I would basically go, if I subtracted 50 cents from that, that would be like at 25 cents, right? Or so basically 78 cents, 44. Yeah, I'm just going to use 50 cents, right? So a 25-cent stop, we're nowhere near that. It should be, yeah, it should be something like that, right? It gets confusing with these things. That's not even on this chart. So I'm not going to use that 25 cents. Hold on a second. So this is, I'm sorry, I got that wrong. Let me rewind. You guys are probably putting comments in the channel. Let me rewind. It's 2 cents, not 22 cents. I'm blind. I can't see. It's 2 cents, 02. Okay, not 22 cents. I'm like, man, how can that be? All right, 2 cents. So if it's 022, whatever, basically we're going to multiply that times 2, right? So that would basically give us what? 4 cents. So if I go 4 cents lower, right, at 78 cents, what is that? 74 cents? That makes sense. So let's see what the low here is 73. So that probably would have stopped out, right? If we used a 4-cent stop, this thing went to 73 cents. So that would have stopped out. Okay. And right now this thing is at what? 72 and a half, 72. So this trade really wasn't that good. Although there was a little bit of green here, this thing would have stopped out before that green was realized. These things are not perfect. All right. They're going to stop out. There are going to be times when it stops out. But a key thing that I can tell you about this is you must use those stops, because if you don't, you can get caught in something, a larger magnitude risk that you should not be getting caught in, right? So it's very important to use the stop and the take profit. But there's an example of a trade. You called it here and it got stopped out, right? And it pretty much, It never even gave you any green. It just went right to the stop pretty much, right? That's going to happen. So it's good that we see that. I don't want people to come in thinking that, I have the magic robot, because I don't. All right. Anyway, we'll be able to observe the win rate on this thing now that we can track the trades. Okay. Let me see what other questions. That's the trouble with if BTC, right? Well, that's called intermarket relationship, right? Bitcoin is the leader, and that's the way it is. These other things don't trade by themselves. Can you explain the correlation between the bond market prices versus? All right, so Sirhan, bonds basically are behind everything in the world because the bond market determines how people can borrow money. It's the price of borrowing money. So if it's harder to borrow money, there's less speculative money floating around. In order for these garbage coins like Dogecoin and all these other altcoins, they're highly speculative assets. People invest in them with easy money. That's why we have asset bubbles when interest rates are too low, because too many people have too much money. So they throw it around, and that money finds itself into highly speculative assets that have high growth potential. When interest rates are high and no one has any money, right? Because now all this speculative money is gone. These things suffer. That's basically the idea. Now, it's not perfect, and we have situations like right now with the NASDAQ and the Russell 2000. There's been some interesting rallies, even though the bond market is not exactly most favorable. I believe that there are other catalysts behind those rallies that are basically propping up a market that shouldn't be as high as it is. That's just a conspiracy theory opinion. You don't want to get in these things either way, but you should understand that bond relationship, especially if you want to invest. That's why I don't touch any of these things long term. I see what's going on with the bond market. We don't have that kind of environment. Okay. And that thought process saved me from buying anything at the market peak in December of 21. You can watch my videos from that time. You will see what I was saying. All right. Thanks, Alex, for mentioning that. Okay. All right. Oh, this guy is criticizing me. That's okay. I don't need you, man. I got plenty of people that are doing well because I taught them the right way. The trade scanner gave bullish momentum reversal on Matic 75.14. Okay. Oh, so it called it again. That's interesting, Stian. This is interesting. Thank you for pointing that out. This happens a lot, okay, where it'll make a call, right, and then it'll call it again. That one worked. Okay, so this happens. I've been noticing this with the trade scanner as well. It makes a call, and then it calls it again, maybe 4 to 8 to 12 hours after. That's a failed low situation developing. That's what it is, right? It sees the buy signal here, but then it fails and another buy signal develops soon after. Those, in my opinion, are very high probability if you get the second one at a better price, right? Like in a situation like that. Thank you for pointing that out. That's not one that we tracked, obviously, from the stream, but it caught this little move over here, okay? So yeah, that happens. That's something I want to teach. Actually, I want to go over that in my meeting, my student meeting, about how that little blip works, because again, that's an iteration of the failed low. That's what it is. It's we're seeing the failed low expressed in the trade scanner. Okay. Anyway, thank you for sharing that. Okay. All right, you guys, listen. Hey Nasir, good to see you guys. Look, I can't answer. If I missed your question, I sincerely apologize. Come back next week. I stream every Monday at 3:00 Eastern time. And I'll be happy to answer your question there, or join my Discord community. You can ask me there. It may take me a little bit longer to answer your question there, but I'm happy to answer. All right. If you'd like to know more about my trade scanner and all the other things that I have, check the links in the description. They're all there. Okay. Also, if you would like to reach out to me, the best place to do it is in my Discord community. People reach out to me on TradingView. Sometimes I can't answer those things right away. All right. So come over to the community, become a member for free, and ask me there. All right. So again, you guys, if I missed your question, I apologize. So I'm going to leave you guys with that. Again, keep it tight. I mean, we have the FOMC on Wednesday. Let's see how that thing comes out. Either way, it's a slow environment. Don't force trades. Okay. So I'll leave you guys with that. Again, I want to thank you all. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.